morning, good afternoon, good evening. Happy Thanksgiving for those of you in the United States. Welcome to our 341st weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. The way this call works is this is an AMA, meaning ask me anything. You can ask me investing questions, finance questions, startup questions, business questions, personal growth questions, anything you want to. And my humble goal is to help you take your career, your portfolio, your happiness to the next level. Now, before we begin, a couple of quick housekeeping announcements before I get to your questions. Number one, if you want to be mentored by me, which I love to do, what you can do is set up a call with me. And for those of you listening on Spotify, I will list the address instead of showing it to you. And that address is harouneducation.com/meeting. harouneducation.com/meeting. One more thing I want to mention. Okay, so I want you guys to be careful of cell phones spying on you. This is a serious issue, and I had an issue that came up with it. So I had the, the iPhone 15, and every now and then the camera on the front started recording me, and the camera on the back started recording. And I tried everything. I couldn't fix it. I called Apple, etc. So I bought the latest and greatest top-of-the-line iPhone, and it still continued. So it might be a software issue, I don't know. So here's what I did, and here's what I recommend you do as well. Number one, I bought here, and you can get this on Amazon, just do a search for camera covers. It's a tiny little camera cover, it's tough to see, and you stick it on the front of your iPhone. So I stuck it on here. Then on the back, I went to Etsy, okay? And on Etsy, I bought one of these camera covers as well, okay? It's pretty cheap. And then I put Velcro on it as well. I just want to make sure you guys are protected. You can't trust these things, especially with AI. Like, there's going to be an issue where we get recorded. I'm not a conspiracy guy at all, but I really care about all of you. All right, let's move on to questions, which is why we're here. All right, first up, are you searching for companies which analysts haven't noticed or didn't make the right projections for? I guess when you mentioned you bought Amazon 100 PE, the analysts had noticed it, but underestimated projections. Yeah. A couple things. Number one, I don't care what analyst forecasts are. I always forecast my own estimates, and I teach you how to do that in my program. So what you do is this. Step one, you forecast revenue for the next 5 to 10 years. Step two, you forecast expenses for the next 5 or 10 years. Step three, you value the company based on your earnings per share estimates in, say, 5 or 10 years. And that's your target price in 5 or 10 years. I don't care about earnings this year, last year, or next year. I'm very long-term focused. And this is the best way to invest, okay? We tell ourselves this. We don't care about the path, we care about the destination. And so for me, when I invested in Amazon years ago, I don't own it right now. But when I invested years ago, people said to me, Chris, it's a widowmaker. You're cray-cray for investing because it trades at over 100 times earnings. And I said, no, it trades at 4 times my earnings estimates in 5 years. Now, Warren Buffett, whenever he invests in a stock like Coca-Cola, which he bought in 1990, which he still owns today, he always tells himself this. I'm assuming the market's going to be closed for 10 years. I can't sell it. That's what I want us to think as well. So when you do investment research on a stock, of course, you look at the management team, the financial model, etc. But I want you to take a step back and ask yourself this question first. In 5 years, will this company and the sector it's in be more relevant or less relevant than it is today? And that will stop you from getting seduced into buying value traps, meaning stocks that are cheap for a reason. Now, when I used to run my hedge fund and work in the hedge fund industry, I would always invest in what I believe are called world beaters, meaning companies that will be very relevant in the long run. You can even ask yourself a different question, which is this. What companies are absolutely guaranteed not to fail 10 years from now? It might be defense contractors like Lockheed Martin. Would the U.S. government really let them go belly up? It might be Goldman Sachs. Would the U.S. government really let GS go belly up? That sort of thing. But the most important thing when you forecast your financial statements is focus on earnings estimates in 5 or 10 years to come up with your target price. Let me move on now to the next question. All right. If Bitcoin rises to 1 million in 20 years, Isn't the average 13% upside per year worse than the S&P 500 expectations? That's a great question. Yeah, it's about 14% based on my estimates. So Bitcoin right now, it has a market cap of $1.81 billion. My 20-year target is $25 trillion market cap. My stretch target, and the one I really believe though, is a $25 billion market cap in 10 years. And if you look at the future value of money and look at the compounding, that results in 29.7% return per year for 10 years. Yeah, great question. Thank you. Do you prefer CAPEX light businesses or more precisely companies with low inventory risk? Absolutely. I hate investing in companies that have to build inventory because the problem with that is inventory can bankrupt you like it did with the Atari Corporation in the 1980s. So in the early 1980s, what happened was Atari, they released the E.T. video game. Spielberg blessed it and said, yes, release it. And I couldn't wait to get it. And my dad bought it for me for Christmas. I was so excited. And it was the worst game ever. And what happened was Atari made hundreds and hundreds of thousands of these things, and they couldn't sell them. So they declared bankruptcy. And they actually buried all of these hundreds of thousands of cartridges in the desert. I think it was in New Mexico. As a result, the whole video game sector went belly up until Nintendo came in around 83, 84 with their NES and reinvented the market. The bottom line message here is this. Inventory can bankrupt your company. I don't invest in companies that produce products unless it's just in time. And what that means is what Michael Dell pioneered out of his dorm room in Texas in the 1980s when he was a kid, which was he founded Dell Computer, now called Dell Inc. And what they would do, Michael Dell, is he would take cash for the product, then build it. So the customer cash was financing that. Yeah. Okay. Next question is, you say, do not be afraid of today's PE, but if growth slows, the PE usually compresses. And that drop can offset a lot of EPS growth. Thinking of it around 100, 150 times is okay, but 400 question mark. Yeah. Yeah. So I don't really care about earnings this year or next year. I look 5 to 10 years out, always. Yeah. Okay. And these companies that are very expensive today, they could be extraordinarily profitable tomorrow if they cut all R&D and they cut sales and they cut other expenses. But I don't care about that. I'm investing in future growth. Yeah. And it depends if you're a growth investor or a value investor. I'm more of a growth investor. Younger people in university are usually value investors because they're taught buy cheap stuff. But I'm different. And it's very contentious. It's like religion or politics. You're either a value investor like Warren Buffett, which means you buy cheap stuff, or you're a growth investor like a lot of hedge funds where you buy stuff that's expensive now, but it will be cheap in the long run. The biggest mistake you can make is this. Investing in a company that is not growth and it's not value, meaning it's stuck in the middle. Because every growth stock eventually sees growth slow. And when growth slows, it's not cheap enough yet for value investors to buy, and it's not growing fast enough for growth investors to buy. And so it's stuck in what I refer to as investment purgatory. Avoid those stocks. And I can give you plenty of examples if you'd like. Okay, next question is, what is your opinion on single cell sequencing companies and synthetic DNA? Yeah, I want you to be really, really careful with those. Okay. So if you're investing in early stage biotech stocks, what happens with them is there's a binary event. They get FDA approval, the stock goes up big time. They don't, stock can get cut in half or go to zero. The same thing with larger cap biotechs. For example, a Biogentic or BIIB did not get FDA approval for a certain drug in 2005. You can look at the chart, got cut in half. So what do you do? So I recommend if you're going to invest in biotechs, especially the smaller cap ones, which are really risky, use a spray and pray mentality. What does that mean? Well, instead of putting 5% in one company, maybe you put 50 basis points in a group of 10 stocks. And if one takes off, great. If one goes to zero, it is what it is. Yeah. And these are really complicated investments because it depends on what stage they are for clinical trials. And again, FDA approval is the number one catalyst for those stocks. It's tough to forecast. Okay. Next question is, when you forecast expenses and you have seen that they're already dropping as a percent of revenue, how do you know where's the limit of this drop? For example, now Nvidia reached 11% OPEX. When can OPEX go that low? For example, would it be possible for Palantir? Yeah, so what you want to do is you want to look at trends. So step 1, forecast revenue. Step 2, look at the quarterly sales and marketing, as well as G&A and R&D as a percent of revenue. And if you see it's dropping by, say, 50 basis points every quarter, you can continue to model that out, okay? And when you listen to the earnings calls, you want to add lots of comments to your Excel financial model. How do you do that? Well, when you listen to earnings calls, and companies report earnings every 3 months, what they do is they hold an earnings call. And during the earnings call, the way it usually starts is the CEO says, we had another great quarter, even if they didn't. Then the CFO talks about numbers in the quarter and potentially forecasts. You want to add every single comment, every note they give you. Then you listen to the Q&A portion of the call, which is the most important part, where the analysts from Wall Street firms like Goldman Sachs, UBS, Morgan Stanley, etc., ask questions. Usually they ask finance-related questions. So for example, let's say that during the call, the CFO says this. Operating margins are currently 20%. Our 5-year target is 30%. Of course, you're going to add that to your 5-year numbers out, okay? And try to forecast that. Now, companies also provide guidance. And what that means is this. They tell you for the next quarter and the current year, the range that revenue is going to be and the range that earnings are going to be. You want to put those comments in your financial model as well. And you need to look at what's called behavioral finance, meaning you have to look at historically, how much does the company beat or meet revenue expectations by, and the same thing with EPS. And so Apple, historically, Oppenheimer was the CFO. For many, many years, they would always guide here to a range, and then they would massively beat. And if they didn't massively beat the high end of the range, the stock would get crushed. So you have to look at that as well. Okay. And usually if a stock drops 20% when they report earnings or goes up 20% when they report earnings, it usually means this. It means the financial analysts at hedge funds and mutual funds, when they enter in the new numbers based on the quarter in their financial model, if that leads to their long-term EPS estimates going up 20%, the stock goes up 20% and vice versa. Okay. Is it true that biotech almost always stays high expense because R&D, clinical trials, and compliance costs can't be cut the way software and tech companies can? If so, does that mean it's not a wise place to search for a 5x5? Yeah, and 5x5 is what I refer to as a 500% return within 5 years. Yeah. So as I mentioned earlier in the call, you want to make sure these are tiny positions and use the spray and pray mentality. And I learned this from the #1 biotech investor on the planet. Maybe I should interview him on my weekly webcast. And his name is Evan McCulloch. And what I want you to do, if you're interested in biotech, is I want you to search for CNBC interviews with my buddy Evan here. He's been at Franklin Templeton for years. He still heads up, the Biotech Discovery Fund. And that spray and pray thing I learned from Evan. He's a buddy. Okay. Okay, next question is, does IT produce mainly 5x5s, meaning a 500% return within 5 years? It all depends. It doesn't have to be tech stocks too. There's many other companies that can. You can look at the Russell 2000 index, look at the components, and pick stocks from there to do investment research on. Does this mean that only 20% of our portfolio could grow at that speed? Yeah, I know what you're referring to. So my risk management metrics I always recommend to hedge fund managers or retail investors is this. Don't ever put more than 5% of your money in any one stock, okay? Also, don't put more than 20% of your portfolio in any one particular sector. And that means this. No more than 20% in tech, retail stocks, for example, like McDonald's, et cetera, telecommunications, industrials, financials, commodities, et cetera, healthcare, et cetera. Yeah. What do you think of investing in next-gen defense tech? I am extraordinarily bullish on that. Yeah. And earlier on today, I said invest in world beaters, meaning companies you think will be around no matter what in the long run. And I think those companies will be much more relevant in the long run. Always make a model, though. Next question is, what if DSO, meaning days sales outstanding, is between 50 and 70? What does that imply? Yeah, it all depends on the sector, and let me show you exactly what that means. So you never want to invest in a company that has too much inventory. Okay, so give me 1 second here. Let me go here to income statement analysis. Yeah, so as you can see right here, let me make sure it's working. Good. As you can see right here, all depends on the sector. Okay, so information technology, and you can take a screen print of this, usually has DSO of 30 to 50. So if it's a tech company that has a DSO above 50, that gets me very worried. And the other sectors, you can take a screen print right here if you want. And this is an excerpt of one of my products for my clients. Okay, let's change camera angles. Let's try something different here. How fun is this? Okay. All right, next question I've got here is, what percent of your portfolio would you allocate to a biotech company? Yeah, and I answered that earlier. Thanks. What is your opinion on investing in clean energy companies or financial insurance businesses? Yeah, let me answer that in order. So when it comes to clean tech companies, I don't like investing in companies that only exist because of government subsidies. And the reason I say that is because if those subsidies are pulled, that company can't stand its own 2 feet. The best example of this was the fall of 2008, when we were within 24 hours of bank machines not working. At that point in time, in mid-08, a massive percent of solar revenues, next generation clean tech stuff, a massive percent of solar revenues came from Spain because of subsidies. And then Spain had massive financial issues, so they got rid of the subsidies. And solar stocks and EV stocks got crushed. So I don't like investing in companies that rely just on government subsidies. Yeah. Okay. And I don't like investing in companies also that are very CAPEX intensive. And quite often that means clean tech stocks. Yeah. Okay. And the numbers never lie. Always look at your forecast for earnings estimates. Next question is, you said to search for 5x5s and you're often wrong. Yeah, I'm often wrong. So when I do my investment research on a stock and I complete my 100-step template I've showed you guys before, I search for a stock that I think will go up 500% within 5 years. Quite often I'm wrong because it only goes up 300% or it goes up 700%, whatever. But if I do the research on it, and if you do your own research, don't rely on me or anybody on television. If you do the research, you won't make the cardinal sin of selling a stock because it gets cheaper. Now remember, Warren Buffett said the New York Stock Exchange is the only store where consumers sell stuff when it goes on sale. So what happens to the overall ROI, return on investment, if you're right once and wrong 4 times? Doesn't it fall to the S&P? Please explain with an example and a number. Yeah. So instead of explaining with an example and a number, because I don't have those numbers handy, just think of it this way. If I forecast a company that's a 3-bagger instead of a 5-bagger, and I forecast a handful of other companies that are 7-baggers and not a 5-bagger, you can do the math, and the math will add up. Yeah. But generally speaking, and I love that your questions and what you're implying as well, because your earlier question implied, don't invest, Chris, in a stock if you only see 15% upside per year. And that's a smart thing to think about. Because if you think you're going to make only 15% per year, just put it in the S&P 500, ticker VOO, which has fees of 0.03%. That's 3 pennies per year for every $100. Do your own research, of course. But my thesis, and this is just me, my thesis is that in the long run, the S&P 500 will probably be up 15% per year on average, as it is historically. Now, I promise you, there's going to be big down years in the S&P 500, but I don't want you to care. I want you to focus on the destination, not the path. Yeah. Okay. It's very tempting to upload SEC filings and answer the 100 questions by AI. Isn't that risky? It is, because AI is quite often confidently wrong. When you enter in AI prompts and you're doing investment research, you always need to say this. Also, show me the source and a link to the source, and double check it, because we know AI hallucinates. Yeah. Historically, no mega cap sustains hypergrowth longer than 2 to 3 years. Does this mean that Nvidia can grow 20% but not more in the next years? Are we late to the ride? I usually don't like to buy a stock when it's at an all-time high, usually. I'll let you do the research though, but this is the way it works. So private companies, usually venture cap ones, backed ones, the ones that are doing well have revenue that's accelerating, okay? And the second that revenue decelerates, the venture capital people, like where I used to work, we call our investment banking friends on Wall Street and say, hey, take the company public. And so almost all companies that are publicly traded have revenue growth that's slowing, okay? There are some exceptions where you see acceleration, which was the case with Nvidia, given a new secular growth trend, AI, of course. But I want you to be careful when you're doing analysis on companies. If you see accelerating growth, you need to understand if they acquired growth or not. It's very dangerous. If a company buys another company and you see growth accelerating because they bought that company, you need to look at the year-over-year comps and make sure that Wall Street estimates don't assume they're going to make a massive acquisition every year. Always look at organic growth, meaning how does the company grow on its own? And that's why with retail stocks like McDonald's, Starbucks, etc., we look at what's called SSS, which is same-store sales growth. All we care about is the year-over-year organic growth of each store. For example, with McDonald's, growth slowed and investors got pissed off. And so McDonald's, ticker MCD, what they did was they said, okay, let's start selling coffee in McDonald's. And same-store sales year-over-year went up huge and investors loved it. Then growth slowed. And so McDonald's, what they did was they started opening the restaurants 24 hours a day for this crowd and other crowds. I don't do this. Investors loved it. And then growth slowed a year later. So how did they invigorate same-store sales, meaning organic growth? Well, they started doing other things like putting in point-of-sale terminals in their restaurants so that a turnover was faster. Investors loved it. And then growth slowed. So what did they do? Well, what they did was they put in plastic seats. So it's uncomfortable to sit there for more than 20 minutes. So you leave. Rinse, lather, repeat. Always look at year-over-year organic growth, not acquired growth. The same thing with hotel companies. So Hilton and Marriott, ticker MAR, all investors care about is RevPAR. And that means this, revenue per available room. You don't give them credit for opening new hotels because that takes on a lot of debt. All you care about is the year-over-year growth organically of each room, revenue per available room, RevPAR. So, yeah. So always think of that when you invest. Okay. Next question is, what are your thoughts on Snowflake? Yeah. I love the company. I always have. I actually got introduced to the company when I worked in venture capital by Mike Spicer. Mike's a great guy. I was on the board of another company with him. I think he's a billionaire now. He's on the Forbes list as well. Did a ton of work on it in venture capital right before I started this company. And maybe what I'll do is I'll have Mike on this call as well. Yeah. Do your research though. Mike Spicer. All right. Next question is, happy Thanksgiving and merci beaucoup for all you do. And make and teach forever. Never leave, please, even if GTA 7 comes out. Dude, okay, when GTA 6 comes out, y'all ain't going to see me for a month, okay? I don't care. I'm just going to be playing that. I'm going to be nerding out. It's supposed to come in May next year, but I think that's been delayed. Yeah, kills me. It will be out one day. And when it comes out, it will break the internet. Okay. If the PE of Nvidia or any chip company is 56, but the revenue growth is 56% too, the PEG will be one. How's that expensive? Yeah, no. PEG is not based on revenue. PEG is based on earnings growth. Let me explain. Okay, and I'll give you an example. So the S&P 500 historically trades at about 15 times. And the S&P 500 has earnings growth historically of about, or about, as we say in Canada, 15%. So a PE of 15 divided by growth, earnings per share growth of 15 means a price earnings to growth rate of 1. So that means this. If a company in the S&P 500 has earnings growing at 30%, it should trade at 30 times. If a company in the S&P 500 has earnings growth of only 10%, it should trade at 10 times. So that's what a price earnings to growth rate is. Now, when it comes to hedge funds and shorting, hedge funds often, when they do their research, part of it is predicated on valuation. And so if a company has a price earnings divided by growth of 2 or above that, they might look to short the company. And if a company has a price earnings to growth rate of below 1, they might look to buy the company as well, amongst other research they do, of course. Okay. Thank you, whoever is clicking the heart button. Love you more. All right. Next question is, what do you think of Google now that they build their own chips and TPUs? Is that a problem for the agency of Nvidia and OpenAI and SoftBank? No. So the T in ChatGPT stands for transformer. And Google invented this in 2017. Why is this not a risk if they're making their own TPUs? It's not really a risk because in 2017, when Google developed this, they open sourced it so other people can technically use it for free. Great question, though. Yeah. And I'm sure you all saw that Warren Buffett is putting on a position on Google, meaning it's moving into value territory. Yeah, it's a big deal. Why do you think so many tech companies like and have Indians at the top, like Sundar and Satya? What do they give as CEO? Yeah, I don't know the answer to that. I'm so sorry. Yeah. Okay. Are you scared of AI and AGI long term? I mean, I teach it like you, but do you have nightmares? Yeah. I'm not. So for those who are not familiar with AGI, AGI means artificial general intelligence, and what that means is we will eventually, in a couple of years maybe, get to the point where AI is smarter than humans. Yeah. I'm not worried about this. And I always view technology as a double-edged sword. I'm more of an optimist to the extent that we can embrace this and be more productive ourselves. Yeah. And what I want you guys to do is try to disrupt yourself before the marketplace does. What does that mean? Well, if you look at Reed Hastings, the founder of Netflix, what he did was when Netflix was a DVD mailing service, he knew, hey, in the long run, this is not a good business model. So he disrupted himself by creating streaming. I want you to do the same with your job. I want you to leverage AI at work and be 10 times more productive than your competition. So let me talk quickly about studying computer science, which I think is the wrong thing to do right now. So Jensen Huang, who's the brilliant founder and CEO of Nvidia, he gave a speech not too long ago. And what he said was, the worst thing you can do, I'm paraphrasing, the worst thing you can do is study computer science in school. And the reason is because AI was made to do this. And I'm seeing this with tons of my clients. I have clients at Meta, Google, all the big firms. Entry-level developers are terrified because they're being let go. Senior developers, they're okay. Don't study and get a job in comp sci if you're younger now. And if you do that, reinvent yourself to do something else. Now, I think the best job you can get that AI won't touch in the near term is direct sales. Okay? And 75% of all jobs at investment banks, by the way, are sales. The reason why I think that's a safe job is because people don't trust AI, especially when it comes to their money. And this is a sad thing to say, but in the next decade or two, we're going to see the biggest generational transfer of wealth in history. And I think one of the best jobs you can get is private wealth management. The reason I say that also is because when you work in PWM and you work at a big firm like Morgan Stanley, Goldman Sachs, UBS, that job is awesome because you can take your clients with you to go to another firm, or better yet, start your own company. Yeah. And the economics work as follows. In private wealth management, you get 1% per year of the assets you manage. So if you manage $100 million, you get $1 million. And of course, you start your own hedge fund, and I'm happy to help you do it. I've started my own as well. You actually get 2% every year and 20% of the profits. Yeah. Okay. If you had to go to grad school again, what would you go for if not computer science? What degree would you want and why so? Yeah. So the only reason that you would think about going to university or grad school is if you tried your best to get another job and you can't. And here's what I want you to do. Because most people go to grad school because they want to get a better job or another job or make more money or change careers. I want you to do this. I want you to set up 100 networking meetings. And if you set up 100 networking meetings and you still can't get a job, then consider going to grad school. Okay. And what you can do to learn how to set up networking meetings is you can read this book of mine for free. It's called Networking to Get Customers a Job or Anything You Want. And I'll let you download it if you want. I'll show you where to download this if you care. All right, you can get this free book at HarounEducation.com. And then scroll past all the propaganda. And then right here, you can just enter in your details and get this book for free. Yeah, okay. All right, let me go back to Big Chris mode. Hey there. Okay. Do you follow the rule of 5% per stock strictly? What if you like a stock or a 10-bagger in your portfolio? Yeah, to be intellectually honest, as always, and transparent, I try to, but I get carried away sometimes and the position becomes 7 or 8%. Yeah. And if that happens, and if the RSI is 80, I'll probably take some profit. Yeah. Yeah. Not the whole position, but part of it. Yeah. But that's a good problem to have. It is getting hot in here. Let me turn on the AC. All right, next question I've got here is, OpenAI is not going to be public anytime soon, per the CFO. Yeah, and that's Sarah Fryer, who's a good friend of mine. I used to work with her at Goldman years ago. She's wonderful. Yeah. And maybe I'll have Sarah on this weekly call too. You wrote, why and how would they justify the money burn and investments they promised to make? Yeah. So it's tough because I remember in 2012, that was the year where companies decided to stay private much longer because they can go public, right now at $1 billion market cap, or wait a couple of years and do 10 billion, or wait 10 years and maybe 100 billion or higher. And back then, in the summer 2012, that was when 3 companies went public. I participated in ServiceNow, to Grant OW, as well as Splunk, ticker SPLK, and Workday, ticker WDAY. Yeah. So it makes sense to stay private longer if you think your market cap's going to be much higher. Yeah. And the benefit there is that people vote with their wallets. The venture capitalists want you to stay private longer, and the employees want you to stay private longer as well, because they're going to be worth a hell of a lot more. Yeah. And I can go into more detail now if you want me to. What do you think of Britain? And why are they in so much debt? They spend 90% of their revenue in debt servicing every year. How valid is this model? And can debt nations of EU survive the debt load? Yeah. United Kingdom will be fine. They're really tight with the United States. They're investing more actually in U.S. debt. And if you go to treasury.gov, you can look at the monthly debt investments. And the United Kingdom now invests more in U.S. treasuries than China does. What China is doing is they're investing more in this, and I think digital gold as well, which is why I'm bullish on this and Bitcoin in the long run. Yeah. In terms of the United Kingdom, it breaks my heart, but it is what it is. They've been in secular decline since Maggie Thatcher became prime minister around 1980 or so. Yeah. It's sad. Yeah. I think the best way to fix it is to cut taxes materially, offer huge tax incentives for tech companies to locate there. For example, if you look at Ireland, they only have 11% tax, and a lot of tech companies like Udemy, Intel, et cetera, have offices there. They need to do same thing in England. Yeah. Okay. Why do nations take debt, and where do they get it? And what is the need for it? Is this a dumb question? It's not at all, man. I always love your questions. Okay. So the way it works is countries are not supposed to be run like companies. And the United States government, which, by the way, is the last government that will ever go bankrupt, last country, last company, so to speak, even. The way they are set up is they print lots of this stuff. Cash is trash. That's why you never keep your money in cash, okay? because the government will keep printing more and more of this. And if you look at M2, the global money supply today, the global money supply today of all fiat, meaning paper-based currencies, is $96 trillion. It was $9 trillion, $90 trillion, meaning $6 trillion less during COVID. I think governments are going to increase this crap by about 5% per year forever. And so the way it works is everybody borrows from each other, and first world countries will never fail because that will have economic consequences of ridiculous potential. Second world countries, can go under. It's more dangerous for them. It's not fair, but it is what it is. For example, we had the Latin American debt crisis back in '94, I think it was. Yeah, but the U.S. will never go bankrupt because China and all other countries will continue to buy U.S. debt. If they stop, there's economic catastrophe, and it hurts them as much as America, if not more. Yeah. All right. Next up, happy Thanksgiving, Chris. Thank you. Blessings to you and your family. What are you thankful for? God bless you. So every day before I go to bed, I do the following that puts me in a peak mental state. Number one, I thank God for 10 different things. Andrew, Matthew, Dylan, my wife, Christine, my mom, my dad, my sister, Katie, who's up there with Grandpa. I love you, miss you so much. I hope to see you one day. My sister, Elizabeth, who we call Yaba. I don't know why. My brother, Jamie, my mom and dad. And lastly, all of you, my students. I'm grateful. That's what I do every day before I go to bed. And I feel great because of that. I want you to focus today and every day on what you have and not what you desire. Yeah. And you'll be happier that way too. All right. Next question is, I'm a student of the CFA from India. What should I do, please? Guide me in becoming a portfolio manager. Thanks. Yeah. CFA stands for Certified Financial Analyst Designation. It's a 3-year program. You write one exam per night over 3 years. So a couple things. Number one, don't buy the textbooks they tell you to buy. It's like $1,000 a waste of money. Go to eBay, spend $35 on Schweizer books, which summarizes everything so you can work smarter and not harder. In terms of getting a great job, a CFA won't guarantee that. It's a great designation to have. What you have to do is this. Step one. This goes for everybody who wants a new job. Step one, create an incredible LinkedIn profile. Step two, get 30 or 40 recommendations on your LinkedIn profile. It works. Step three, network and get tons of informational meetings. Every time you see a job opening online, you have a 1 in 250 chance of getting the job. The person that gets hired knows somebody at the company. Network. Your network is your net worth, and relationships are more important than product knowledge. And you only have to be right in business one time. So keep networking. And as Michael Jordan, who's better than LeBron, kids, used to say, I failed over and over again in my life, and that's why I succeed. Your network is your net worth. Oh, goodness. Mark from Michigan. I haven't seen you in a long time. Hope you're doing well. You wrote, happy Thanksgiving, brother. And I love how you always type to me all in caps. Reminds me of my grandfather. Grandpa, I miss you. I know when you emailed me in all caps, you weren't yelling at me. I know. Yeah. Yeah. And then you wrote, how do you get top tier law firms like Kirkland and Ellis to structure deals for you? Yeah. Well, when it comes to lawyers, you get what you pay for. Obviously, it's very expensive. What you can do is this. A lot of venture capital firms, they get free legal services. And they do it because they issue what are called warrants. And what that means is they create shares, which cost them nothing, and they give it to the law firms. Yeah, you can try that. Next question is, I was reading about derivatives. They are literally betting tools. How do governments allow them? Yeah. So derivatives are basically insurance products. And so the global derivative market is so big, it's 6 times bigger than the global stock markets. And they're important to have. They're important to have because they're all about the rate of change and about hedging bets. So, for example, let's say that you're Southwest Airlines. This is a true story. This is fascinating. Southwest Airlines, ticker LUV. Back in 2003, they were paying $30 a barrel for oil. And they realized at that point in time, the CFO is brilliant. They realized that, oh my gosh, in the next 5 years, between 2003 and 2008, before the Beijing Olympics, in the next 5 years, the Chinese government is going to build more buildings in China than the cumulative total of every building built in every country since the beginning of time. What commodities are going to be used for that? Well, part of it is oil. And so the price of oil went up to $150 in mid-2008. So what Southwest did in 2003 was they used derivative products to hedge the price of oil and lock it in so that for the next 10 years, they're only paying $30 a barrel. Smart, right? And then what they did in 2008 was Southwest was very, very strategic and ruthless. They cut the prices of their tickets and they forced American Airlines, Delta, Continental, and others into bankruptcy. That was using derivative products. Think of derivatives also as being insurance for you. Okay, it's like life insurance. So for me, for example, I'm worth more dead than alive. Laugh at me, not with me. I pay this much money every month, life insurance. If I die, God forbid, then what happens is this is worth a lot. If I don't die, yay, this goes to zero. And it's the same thing with options. So options are a subset of derivatives. So if I own a lot of Coca-Cola and I'm worried it's going to go down, but I don't want to sell it, otherwise I'll pay a lot of taxes, then I can buy a put. If Coke goes down, I make a lot of money. If Coke goes up, I'm still happy, but I lose this much here. But you got to be careful of derivatives too. If they're overused, it can force the global economy into bankruptcy, which almost happened in 2008. And before 2008, Warren Buffett called derivatives financial weapons of mass destruction. You have to be careful. And I don't recommend my students transact in any derivative instruments except maybe buying a call or buying a put. Don't ever underwrite them because you can lose way more money than what you invested if you get randomly assigned. I can talk about that in more detail if you want me to. Okay. Have you ever seen the show Halt and Catch Fire? It's about the personal computer boom in the 80s and 90s. I have not, but I'm a history buff, and I will check that out. Let me take a screen print. Thank you. All right, next question is, what do you think about technical analysis? Do hedge funds use technical analysis? Yeah, but the best hedge funds in the world, I'll show you what they do. Okay, so what they do from a research process perspective is they look at qualitative research, okay, like the management team first, always, okay, and then they document it down here. Quantitative research, total addressable market growth, etc. Financial research, right, forecasting financial statements, etc. And the very last thing they look at, the smart ones, is technical analysis, okay? And what comes out of this report, and this is just dummy data, and you can bring this to your interviews if you want, is you look at fundamentals first, valuation second, and a distant third is technical analysis, way down here, okay? And when it comes to technical analysis, and I've done lots of videos on this and answered a lot of questions about this in previous webcasts, you can always search for it. It's the last thing you look at. And you look at it because it can help you understand if a stock is oversold, meaning an RSI of 20, which means buy as long as you're happy with the fundamentals and the valuation. Or it can tell you when to short a stock if the RSI is 80, for example. Yeah. Or take profits. Yeah. But of course, you look at fundamentals first, valuation second. Distant third is technical analysis. Don't get seduced, folks. Please, I say this with love in my heart. Don't get seduced into day trading. It does not work because we cannot name a successful day trader ever. And we've all been there, man. We've owned a stock over the years. The chart's like this. Then it goes like this. We're like, scared, selling it. And now it's up here. I always want you to tell yourself, I don't care about the path. I care about the destination. You'll sleep better at night as well, and your net worth will go up materially in the long run, I promise you. Yeah. Okay. Ugh. Next question is $5 million enough to retire? Yeah. It all depends on what your monthly cash flow is. Right? So you can run a financial model, and I teach you this in my courses. You can run a financial model to figure out how much money you spend every single month. Use net present value every single month over X number of years, and make sure that number is less than 5 million. Yeah. Okay. Hey, Alex. Alex wrote, happy Thanksgiving. Thank you. Do you think airline tickets to the U.S. will get cheaper due to increased competition in the market? Competition is always a good thing for the consumer, which is why the DOJ needs to break up big tech. But they're not doing it for strategic government reasons, I think, in my humble opinion. Yeah. So I don't know if they'll get cheaper. I I don't know. It's all predicated on the price of oil as well. If oil prices go up a lot, as I mentioned with Southwest earlier, then airlines may raise prices. Yeah. But there's no innovation in the airline market. It's ridiculous, man. Like, why is it that it takes just as long to fly from Toronto, where I'm from originally, to London today versus 40 years ago? You had the Concorde for a while till it caught on fire, but it's ridiculous. Yeah, doesn't make sense. My gut, I don't know anything, but my gut is that Elon Musk will find a way to travel faster and one day dominate that market, leveraging technology from SpaceX. Yeah. Next question is, how do you know your camera was recording you? Yeah. So what happened was this, and this is, if you're just joining us earlier on, I mentioned that my iPhone was recording me. And it was crazy. And I talked to Apple, they couldn't do jack to help me. But the way I know is the light was turning on up here, okay? And I've got one of these sliders that turn on and off. And also the way I know is in photos, it was taking videos of me. And here's an example of it right here, a couple of videos right here. And it was actually recording my desk. And I tried everything. Here's more examples, okay? I tried everything. For months it was recording. My desk at night, it was crazy. Yeah. So, yeah. And I'm going to show you guys really quickly what product to buy to stop this. Okay, I don't get any frickin' affiliates. I don't really care. Let me go here to orders. And then I'll go to camera cover, is it? Or webcast cover. Here it is here. Okay, good. All right, I'll drop this in the chat as well. Okay, so I bought this. It's $3.99. Please buy this. Please put it on your kids' phones, your laptop as well, right? And you just slide it over. You get a bunch. Some of them fall off. It sucks, but it is what it is. So I'm going to copy this link, okay? And then I'm going to put this in the chat because I care about you guys. Okay, that's the camera cover. I want you guys to order that now. And then I went to Etsy. And then within Etsy, what I did was I bought a camera cover as well. So iPhone camera cover. Do a search here based on your model. Here it is here. So you can get something like this, cost me $6. And then I recommend, if you're going to do this, because they fall off sometimes in your pocket, what I recommend doing is also, stop that. Let me go here. All right. I'm going to go over here. Okay. Also, what I want you to do is I want you to buy double-sided Velcro as well, so it doesn't fall off. Yeah. Okay. Only the paranoid survive, as Dr. Andy Grove said, one of the co-founders of Intel. All right, next question. 5 months ago, I left my career job and I opened a restaurant. Now that it's self-running, I'm trying to get back in my field with a tough market. Should I omit restaurant from my resume or leave the gap? Yeah. So first of all, I never recommend telling a verifiable lie, of course. You know, it's one of the 10 Commandments. However, there's nothing wrong with omitting certain things on a resume or a LinkedIn profile if you just list the years. So let's say that you worked at Microsoft from, I'm going to make this up, from 2007 until this past summer, 2025, okay, July. Well, on your resume, you can write 2027, 2025 Microsoft. Then when you get your next job in December, you can write 2025 to present, that sort of thing. Yeah. I hope that makes sense. And if you have follow-up questions, let me know. Thanks. Okay. Thank you, everybody, for the Thanksgiving messages. I'm grateful for all of you. Okay, give me 1 second. Hey, Andrew wrote, hey, Chris, I'm a dental student and interested in OFMS. I don't know what that means, sorry. Do you have a unique perspective in how the dental surgery industry may change? Yeah. Robotics in the future, you can look at ISRG, et cetera. Maybe some offshoot of that, meaning intuitive surgical, et cetera, could help you in that business. Yeah. But I'm not worried about AI destroying that market at all. In fact, a lot of private equity firms, what they're doing is they're investing in anything That has nothing to do with AI. They're investing a ton of money right now in plumbers, hairdressers, I'm assuming dentists as well. Yeah, but I would still leverage AI to work smarter, not harder. Maybe get rid of back office people you have by leveraging AI. Yeah. Okay. And I never understood why dentists don't use LinkedIn more often. Like, make a LinkedIn profile, create an incredible post every week on dental hygiene, helping people, and then have a CTA call to action at the bottom saying, if you'd like to be a patient, etc., click this link, set up a call with me. Yeah. And everybody should do that in all businesses. Okay. Okay. Adrian wrote, Happy Thanksgiving. Thank you. Is there a good way to take some profit for a stock that has risen substantially but not yet reached its 5-year price target? I don't want to re-enter at a higher price. Yeah. So a couple things. Number one, don't ever buy a stock when it's at an all-time high. Okay. I promise you, be careful of FOMO, fear of missing out. Always tell yourself this with every asset. I can buy it cheaper. Just be patient. So if you have a stock and it's above your 5% portfolio limit, say it's at 6%, and the RSI is 80, I don't mind taking 100 basis points or more of profit and re-entering later. Yeah, you got to consider taxes too, though. If it's in a retirement account, that's a moot point. Yeah. Okay. Next question from Peter wrote, Hey, Chris, on the subject of university degrees. When I was doing some studying in project management, the line was, if you're doing it as a university degree, you failed the section on cost control. Yes, yes. I think my kids are the last generation that think that maybe they should consider getting a university degree. He's just finishing up Berkeley. He's an investment banker. He has no idea what he's getting himself into. He's 21. He is doing private wealth management, finishing second year, I think, first year. And he is 16, going on 40, the youngest one. It's getting sad too, man. My house is getting quieter. So for those of you with kids, please enjoy the insanity, every second of it. And for those of you with newborns, okay. And for those of you who don't have newborns yet, you don't know true happiness in life till you hold your child for the first time. It unlocks this euphoric feeling you never thought you could ever feel. And for those of you with newborns and you're pushing your kid down the street in a stroller, if you're stressed out and somebody looks at you and smiles, like an old person like me, they're telling you, enjoy every second. It's why we're here, man. Yeah. And I want you to skip work when your kids have an important meeting at school. I'll never forget when Andrew was 2, he went to a preschool called PTS here in the Bay Area. And there was daddy-child breakfast day at work. I missed it. And because I had an important meeting. I don't know what the hell that important meeting was, but I remember missing that meeting. Okay, we're having buffering issues here. Give me 1 second, see if I switch to a back. All right, I switched. Starlink did not work, but I switched to AT&T right here. It's like the front door of my business shut down for a second. All right, hopefully it's working. We are good to go. All right, we're fine. Sorry about that. Okay. All right. And when you give a presentation, always bring 2 laptops just in case, which is what I do. All right, let me move on to the next question. How did a country like Greece go bankrupt? And what does it mean when a nation goes bankrupt? Yeah, so Greece almost went bankrupt back in the fall of 2008 when we were within 24 hours, bank machine's not working. I remember at the time people were saying to Greece, hey, sell off some of the Greek islands. But given the fact they're in the EU, they won't go bankrupt. Yeah, yeah. When a country goes bankrupt, though, what happens is this. They default on their debt payments. It's like declaring Chapter 11 for people or for companies. Yeah. It just means they're going to restructure their debt. The International Monetary Fund will come in and save them. Or in the case of the United States with Argentina for strategic reasons, meaning they hate communism, hence Venezuela, they'll save them as well. Yeah. Okay. Hey, John, how are you? John Clee wrote, have a blessed day. Happy Thanksgiving. And big shout out to John as well. He's been working with me for more than 5 years now. He's the best. And when you watch the replay of these videos, if you go to the description of the video, you'll see the clickable links. And John has been creating that for years. He works with me in sales now. He's the best. I love you, brother. Thanks. All right, next up, in a decade, what industry will be gone and what jobs will be useless, and what do you see? Yeah. So I think companies affiliated with oil, some of them will go belly up. I don't know which ones. Probably not the deep oil drillers, but some oil-based companies I think might. And there's a very famous Saudi Aramco executive who once said that the Stone Age did not end because they ran out of stones. Okay. Next question is, hey, Chris, love your videos. Thank you, Theodore. What are your thoughts on the ethics of working at defense companies? Yeah. Oh, that's hard because I don't invest in tobacco companies. I don't invest in marijuana companies. I don't think it should be legal except for medicinal purposes. I don't invest in healthcare companies that make anything that has to do with opioids. Defense companies. So I have a client that's working on the Golden Dome, which basically is kind of like what they have, the Iron Dome in Israel, that protects the country. Okay. I don't mind helping him out, but I do have issues investing in companies that create weapons that kill people. Yeah. So I don't mind investing in firewalls, for example. Yeah. Yeah. Okay. Next question is, how did China get so ahead in most industries by being a communist and closed country? What is it with them that the world does not know and understand? They are number one in EV, solar, shipbuilding, manufacturing, even AI. Yeah, I don't think they're number one in AI. I think the US is. Yeah. So there's a saying that Chinese communists are the best capitalists. And one of the things I respect about the way they run their country, although I despise communism, is they're long-term focused. And when you invest in a company in the United States, if they're being run by the founder doesn't give a damn about quarterly earnings. They're long-term focused. And the board loves them for that, and investors love them for that. The problem is when a founder leaves a company, don't ever invest. Okay. Because 99% of the time, it's a loser investment, especially in tech. When a company in tech starts going to secular decline, like revenues declining, they're losing share, it's almost always game over. And the problem is, if you're not the founder of a company and you're CEO, you're a slave to Wall Street and the board in terms of quarterly earnings. Now, if you're a long-term investor and a long-term CEO, you'll do well. Okay? That's why I love founders. And that's why Warren Buffett, when he invests in a company, he always assumes the market's going to be closed for at least 10 years. The longer the view, the wiser the intention. Now, when it comes to China, they make very long-term bets, right? There's no term limits. I believe in term limits, right? Very, very long-term bets. And what China is trying to do right now, it's interesting, is they're so dependent on the U.S., more dependent on the U.S. than the U.S. is dependent on China. And that's a risk. So they're trying to build up their domestic economy so that they're not as dependent on America and the rest of the world. Now, what people don't realize is that 2/3 of the United States economy is consumer spending. That's why everybody's going to be focused in the next couple of days on how were Black Friday sales. And when the American consumer sneezes, the whole world feels it. Yeah. In terms of dominance in China, I still think that innovation will come from capitalist countries more so in the long run, like the United States. Yeah. And you got to be careful with potential civil unrest if growth slows in some large economies. Yeah. Okay. Next question is, Bill Ackman is going public with his fund. Yeah. What is the point of buying a holding hedge fund when one can buy the holding they own? Am I missing the point? Yeah. You're betting on his track record, and you're betting that the use of proceeds that he's going to take, he's going to invest in companies and do really well. The problem with that is this. Scaling a hedge fund to be too big is deadly because it takes a while to turn a big ship around, meaning investing in different positions, right? So, yeah, it's hard. And it's interesting because there's a book called The Hard Thing About Hard Thing, or there's a book that Peter Thiel wrote called 0 to 1 back in 2015, I think it was. And what Thiel said was, if you look at Andreessen Horowitz, great venture capital firm, they got too big to the extent that their investment in Instagram, although it went up hundreds of times, it only moved the needle by a handful of basis points per year. Yeah. Currently, I'm finishing my BSc in electrical engineering. Any recommendations for an AI-proof future? Medical engineering maybe question mark. Yeah, it's rough. It's rough. Yeah. So the way to make 2/3 of a BSc, not BS, sorry, that was awful bad humor, is to get a client-facing role, meaning sales. So what you can do is you can get a pre-sales position in engineering at a company, and then network and get to a sales position, because sales is the best gig out there if you work for somebody else, because the meritocracy, you eat what you kill. And I know a lot of quota-carrying sales reps here in the Bay Area that work at software companies that make $3 to $5 million a year. A lot of them make more than the CEO as well. And a great CEO and a great founder is a great salesperson. It's the most important skill you can learn, and I certainly teach that in my products. Yeah. What is the best jurisdiction to set up a trust, and what kind of trust is the best trust to protect yourself? Yeah. So everybody needs to have a will and trust. And a will says who gets what if you pass away. A trust you need. If you don't have a trust, then what happens is when you die, talk to a lawyer about this first. When you die, what happens is it goes into, all your stuff goes into probate, and the general public will know what you have and who's getting what. It can take a year even, and costly legal fees. So set up a trust. Now, there's revocable trust and irrevocable trust as well. And if you want, go to LegalZoom.com and get a lawyer to make your will and your trust in one go. And the way it works is this. When you set up the revocable trust, meaning it can be changed by you, irrevocable means it can't be changed by you, which is what's happening with the Murdoch family. But when you set up a revocable trust, it's usually called this: the Chris and Christine Haroun Revocable Trust, dated February 1st, 2023, or whatever date you set it up. And for tax reasons, your assets can be protected as well. Again, go to LegalZoom.com and ask them to set it up for you. Yeah. And I made a video on this as well. Just search my YouTube channel for Succession. I did a video on that explaining the trusts. Okay. Next question is about offshore trusts. BVI or Cayman or better. And I'm in Arizona. Oh, you moved from to Michigan there. Okay, cool. Excellent. Yeah. You're gonna have to talk to a tax lawyer about that. Now, when I had my hedge fund years ago, which I transitioned into a venture capital firm where I owned positions in Facebook, Palantir, et cetera, what I did was I set up a master feeder. And what that means is this: my domestic entity and my offshore entity, the British Virgin Islands, fed into a master structure. Why? So my American investors could invest onshore, and my international investors, like $6 million I had from AB and Amaro and tons more from Canadians, et cetera, they invest in British Virgin Islands. The reason why I use BVI and not Caymans is because it's a lot cheaper. And the way it works is this: the offshore legal firm that you hired has a board, and therefore you can have an offshore bank. You never give tax advice to your investors. Make sure you hire a securities lawyer as well. If you want, you can contact mine, Jim Grand, from the Securities Law Group here in the Bay Area, and just tell him I sent you if you want. Yeah. Okay. All right, next question is... Pulassi wrote, Chris, you totally remind me of Phil Dunphy from Modern Family. I am, dude, that is me. I love that guy. Yeah. Yeah. And he wants to marry Gloria. Okay. You just explained that new gadget with such Phil Dunphy excitement. Happy Thanksgiving to you and your family. I love that. Thank you. Thank you. Dude, that is me. And on my TikTok feed, I get tons of stuff from him. Yeah. Yeah. Meaning from Modern Family. I am him. Yeah. I was first in line to get the iPad when it came out too. And when I brought it home, I nerded out and all my buddies were like, oh my God, you're done, Fee. Yeah, I am. Yeah. And Phil's wife in the show, his sister lives locally here and she's really similar to the wife as well. Yeah. She's a rock star and helped with the COVID cure thing. Okay. Okay. Next question is, why do most companies get crushed post-IPO, even after a 6-month lockup period? It keeps falling like a knife. What are your thoughts? Yeah. It's not most companies. It depends on the company and the market environment too. If we're in a bull market, company goes public, stock does well. Then we're in a bear market, market pulls back, which it has been. Then the stock can pull back as well. Now, historically, the way it works is this. So in venture capital, when one of my companies had an exit, of course I had to sell, but I can't sell on day one. You have to wait 6 months, meaning the 6-month lockup period. So I'm not allowed to sell for 6 months, but I always sell the crap out of that stock. And I don't care if it has a cure for cancer. Why? Because it's like 99% of my net worth, a big percent. Yeah. And if you see a pullback, it's a great time to invest if you've done long-term research. Yeah. Don't ever buy a stock at an all-time high, and be careful of FOMO, as I mentioned earlier. If AI gets to a level where it can almost do everything, then the bottom line will be high every year and the stock will never fall logically. Yeah, you got to run the numbers yourself. All right, now what I'm going to do right now is I'm going to be an idiot and show you my latest gadget. All right, couple things. So this here, one of my students had this, and I'm doing this. This is 20-pound weight belt. And this is an example of me being Phil Dunphy, okay? A 20-pound weight belt that I'm going to put on now. And please don't use this as a life preserver because it's not going to help you actually in the water. But this is going to help me. This is my Phil Dunphy moment. And then what I'm going to do is I'm going to get my exercise in because I get my 10 to 20,000 steps per day here. Here we go. All right, good. Now I'm going to start walking a bit. I'm going to raise my desk up a bit so you can see my messy office. And I recommend you guys do this as well. Get a desk like this. Okay. Okay. All right, Phil Dunphy, about to answer the next question. Okay. I like to ask, what skills or courses do you recommend taking for somebody who wants to get into investment banking, from a non-target school? Yeah, a couple things. And I have a lot of clients I help with this. If you want, why don't you do this? See the link in the description. Book a meeting with me for today, actually, if you want. I'll talk to you about it. I'll help you. Yeah. But I recommend just taking basic finance and accounting classes, but you got to get straight A's. And if you're in a non-target school, you got to set up a lot of informational meetings. Okay, tons of them. And so step 1, great LinkedIn profile. Step 2, network like crazy with people that went to your school. That work at the firms you want to work at. This will help you. Okay, and I can help you do it. Set up me, I'll help you out. All right. Give me 1 second here. All right. What is the right time to marry and have kids? Never. Next question is, I'm just kidding. And you know, this MBA program I teach, you know, it's married but available. That's what it stands for. I'm just kidding. This never comes off. Yeah. What is the best time to marry and have kids? Tons of young men and women are skipping it. Maybe I'll miss. It's too stressful. The way I look at it is, I don't know, man. Like, if you want to have kids, get married. But when you find your soulmate, it's so random. But like, you gotta be, so growing up, I had a lot of average looking friends, meaning they're way better looking than me, that always dated hotties. And the reason is because they asked. And you gotta tell yourself, like right before you're about to ask somebody out on a date, and before an interview or a presentation, you gotta say this: I don't really care what they think of me. Because confidence leads to perceived competence. It's the most attractive trait. Don't care what people think. And when you're asking somebody out, I want you to think this too. I'm going to ask 100 supermodels out. And the 101st is going to say yes. And that means this much lifetime pleasure. Now, every single person that says no, the first 100, it's going to be that much pain, which all added up is this. But the lifetime pleasure of one saying yes is here. That's how I want you to think about it. Yeah. Take a chance. Ask her out, dude. Yeah. You got nothing to lose. You're out of her league. Okay. All right. Next question is from Mark Satones, who wrote, have you seen Being Eddie Murphy on Netflix? I have. I loved it. Absolutely loved it. That guy's a rock star. His house is beautiful, too. What I love most about his house is he's got that roof that opens and closes. Very cool. Yeah. I love everything about Eddie Murphy. Everything. Yeah. Yeah, and he was right to be pissed off at David Spade. Okay. Is it worth pursuing a master's degree or networking applying for a full-time job instead? Yeah. So set up 100 networking meetings, okay? And if you can't get the job after 100 networking meetings, then get the master's. Yeah. And I'll help you with networking as well. I'll save you a lot of money. Check out my programs. Go to the link in the description, set up a call if you'd like. All right. Next up, I've got, why does communism suck slowly? The world is sick of greedy capitalism. As gap between rich and poor is so wide that it's becoming impossible to fill the gap. What are your thoughts? Yeah, I disagree. I love capitalism and I hate communism. The reason I despise communism is I hate anything that limits your potential in life. I hate that. I hate being claustrophobic working in a big company too, if there's a limit on how much you can make. I hate that. I'm a libertarian. I believe in freedom of the individual. You know, I believe that you should live free or die. That's what I believe. And that's why I despise everything about communism. And it breaks my heart because I have corporate clients, big semiconductor companies, that pay me, 25, 30 grand humbly a day to give a presentation. And before the presentation, they've started saying to me, Chris, we know you don't like communism. Don't mention that in your speech because we have a lot of employees now in China. I don't do business with them anymore. Okay. All right. What do you think about the fintech industry, meaning finance and technology? Does it have prospects in the future for startups and eventually a big multi-billion-dollar company? Also, what's the future of currency, money, and CBDC? Yeah. So when it comes to fintech or any startup in general, I'd have to look at the business model in a lot more detail. Now, whenever I analyze a business, first thing I look at is the management team. I look at the CEO, I interview the CEO, and if the CEO gets me excited about the company and I pretend like they're selling to me, then I get excited about the company. I'd always rather invest in an A management team with a B business model instead of a B management team with an A business model. And the most sophisticated investors I partner with in the past, like Peter Thiel, Sequoia, Andreessen, etc., they do the same thing. There's a reason why Peter Thiel's firm is called Founders Fund, because they invest in founders. Now, the reason I want to get excited when meeting with a founder, CEO, who's sales-oriented, is because I know they're early. And I know their business model is going to change. And I know the market's going to change too. But do they get me excited about their company or not? Yeah. And that's why you got to look for people like Mark Benioff or Sir Richard Branson. Sir Richard Branson oozes positivity and gets me excited. He can sell. So could Steve Jobs, God bless him. I look for people like that. A little bit of lightning in a bottle. Okay. What I also look at, obviously, is the total addressable market. So never invest in a company that has a tiny market. Because if they get 5% share of a billion-dollar market, what is that, 50 million? Who cares? Now, in the past, I've partnered with firms like Kleiner Perkins, and Kleiner Perkins, the partners there, told me They often don't invest in a company if the total addressable market is not at least $20 billion. And the reason is, in the unlikely event that the company they're investing gets 5% share of a $20 billion market, that means $1 billion in revenue per year. And it's hard, man. Like if you look at the top 10 venture capital firms on the planet, they have 1% of their portfolios in unicorns, meaning companies worth $1 billion or more. 1%. Most of these go to zero. Now, Sequoia, this is crazy, 5% of their investments are billion-dollar companies. So when I invest in a company, I look at, obviously, a great management team, large total addressable market, a good syndicate of other investors. So, for example, Sequoia led the Series A on a company years ago called Cohesti, the venture capital firm I was at. We led the Series B. I had the board seat as well. Of course, it helped me that Sequoia did the Series A, but I did my own research as well. I love the CEO, founder, Mohit Aaron, as well. He's money, but you got to look at much more than that. Yeah, and I have so in my program actually I have what I refer to as my venture capital bootcamp, and what I do is I have you fill in all these questions. Okay, management team, product, service, customer, market, competition, go-to-market strategy, sales and marketing, and most importantly, all the financial statements, which I teach you about from scratch, and then we export this directly into a business plan and presentation slides. But we always start with the management team. It's kind of like, it's the same thing also, guys, when you're looking at stocks, to invest in stocks. You always start with the management team. Because what is a company? Well, a company is nothing more than a group of people. I know it sounds silly and Philadelphia-ish, but the jockey's always more important than the horsey. Always. All right. Thanks to you, I use your Warren Buffett quote more and more when talking about the stock market to friends, family, and coworkers. He's great. He's great. Now, he is going to be stepping down later this year, which means that Berkshire is not a good investment anymore because the founder's leaving. Yeah, it is what it is. I wholeheartedly believe that. All right, let's get my coffee here. See my coffee? That's my coffee. Okay. Do you think the UAE, meaning United Arab Emirates, will be the next spot for AI startups? So many entrepreneurs are there because of no tax. Yeah, I've been to Dubai and Abu Dhabi many times before. Sorry. I love it as a place for raising capital. I've raised millions and millions of dollars there in the past. Innovation, no. And here's why. I gotta be careful what I say. As much as I love the UAE, if you're a Saudi national and you visit there, or if you're part of the 15% that are UAE nationals, you feel safe. But if you start a company there, I'm going to exaggerate a bit, okay? If you start a company there and you fail, there's a chance you can get kicked out of the country. That's not a good incentive system for me. And if it was all about just throwing money, at startups, then why wouldn't Saudi be the technology capital of the world? There's cultural issues globally as well. So you look at the United Kingdom. The United Kingdom has their own Silicon Valley they've tried to create. And I have a lot of people government officials reach out to me to ask me about, we want to create a Silicon Valley here. Can we do it? No. So in England also is as well. And I love England. I've got some British in me as well. But there's kind of I don't want to say a caste-based system without saying a caste-based system. I've had friends that have gone to England as Rhodes Scholars, and they leave. And I say, why do you leave, dude? You're a made man. You went to Oxford. And my buddy was like, dude, I wasn't born there. I feel like there's a glass ceiling. Huh. So why is Silicon Valley relevant? So I don't invest in startups in New York City or Toronto, where I'm from. I've invested in tons of startups in the Bay Area. And I'm not saying this is a raw California West Coast thing. It's a culture thing, taking risks. And 50% of the founders I've ever invested in were born overseas. And I despise getting rid of H-1Bs. I think it's the most beautiful thing for America. Immigration's a great thing. But the reason I don't invest in startups when I go to New York City is when I used to go to New York City, look at startups, it's hard to really come up with a list of big tech companies founded there, right? Even though it's so big. But when I walk in, the first thing people do is they minimize their screens. They don't share information. It's a cultural thing. So what is it about the West Coast, the Bay Area, that makes Silicon Valley relevant here? What is it? What's different? A couple things. Let me start with John F. Kennedy. So JFK, God bless him, I think he was one of the best presidents ever. So he founded sort of NASA around that era, okay? And he said around 1960-ish that let's put a man on the moon in the next 10 years. And in order to do that, you needed to fit 100,000 transistors in the fuselage, meaning the top part of the rocket. How the hell do you do that? Well, one of the first venture capital investments was done here in the Bay Area to help with that. And there's a bunch of guys initially that worked at Shockley, working for this jerk at Shockley, and they quit and they created Fairchild Semiconductor. And these are the traitorous 8, and they're my heroes. And they created this company that figured out how to put 100,000 transistors in the fuselage of the rocket ship. And that was a contract with NASA, and they changed the fucking world. And right here we have the founder. We have Craig Barrett, who is one of the founders of Intel. We have Eugene Kleiner, one of the founders of Kleiner Perkins, and many other really successful dudes. They quit Shockley and started this. And they did so well. Now, why the Bay Area? Why did it work in the Bay Area? And why did the Bay Area grow? So Bay Area started out in the late 60s with semiconductors. A lot of successful semiconductor companies came out of Fairchild. And then Fairchild got big and bureaucratic. And then Fairchildren were invented. So Barrett left to start Intel. You had people leave to start Nvidia. Eventually, indirectly, AMD, Nvidia, I should say, and many others. And then around the semiconductor industry, the hardware sector was created. You know, Bill Hewlett-Packard got started. Okay, and then Apple, and then software companies like Oracle. And Oracle was a secret CIA project, the first CIA global database called Project Oracle. Larry Ellison started it. And then around software, all here in the Bay Area, you had the internet, then mobile, then AI, etc. Why the Bay Area and nowhere else? A couple things. It started with the hippie generation. I've written lots of articles on this in Wired Magazine, Entrepreneur Magazine, tons of articles. I give a speech on this too. It's fun. So what happened in the 1960s, at the same time as all that tech stuff grew, what happened was there were a lot of riots at Berkeley, where my son goes, and Stanford. And there were riots because these kids were pissed off that all they know in their life is war. Their dads might have died in World War II, their grandfather in World War I, and their brothers were being sent to fight a bullshit war in Vietnam. So they protested. Then the protests got out of hand to the extent that the administration building was taken over by students at Stanford University. Nobody talks about this. Do a search on it. And one of the reasons there was massive protesting on campus, because at that point in time, in the late 60s at Stanford University, over 50% of Stanford University's classified R&D was classified government military weapons research. And the students were like, dude, this is bullshit. I'm not paying tuition for that. And so what Stanford did was they said, we're sorry. That's how Canadians would say it. We're sorry. That's where I'm from. And they pushed Stanford Research Institute off-site, SRI. And when they apologized to the students, the culture started changing. It was the hippie movement, right? Share everything. Open source computing started at Berkeley. And Berkeley is where software and the computer and semiconductor were sort of invented. And so there's a culture of sharing. And that took a long time to develop. And so between 1960 and today, that's what, 60 years or something like that? It took a long time to develop. And here on the West Coast, failing is cool. It's not shameful. Take a chance, man. Oh, you failed? Oh, cool. Try again, eh? So failure is not shameful. Taking risks is not shameful. And people are pretty open-minded here. It's not just a rah-rah American thing or California thing. It's 50% of all founders here were born overseas and CEOs of great companies here as well. So on the West Coast here, it's cool to fail. On the East Coast, where I'm from, Toronto, and New York, where I used to live, it's kind of shameful to fail. But if you fail and you try again, you're successful. Hey, people forget about the failure. Now, in some countries, of which I'm not going to name them, but in some countries, if you fail with a startup and you're successful later in life, all people remember is the failure. Now, that in a nutshell is why it's hard to replicate what we have in Silicon Valley in other countries. And if you have follow-ups about that, please let me know. Thanks. Okay. Oh, quick reminder to everybody in my premium programs. Every Thursday, y'all know I have 3-hour and 20-minute Zooms. And I have Zooms lessons every day. I don't have it today because of Thanksgiving. My wife and I were going down to San Jose to her cousin's place. I want to stay married. Hence, I'm going to force family fun. Okay. Is it true that hedge funds returning less than the S&P 500, which is 15% per year, will fail as no one would invest because they can simply invest in Schwab, VOO, and leave it? No. So hedge funds, a lot of people misunderstand this. I say it with love in my heart. If you think of the word hedge, in your backyard, you have a hedge, and that protects your house, sort of, right? And so hedge funds protect capital. And a lot of very rich, sophisticated, accredited investors in hedge funds, they do it, number one, to preserve capital, and number two, to make money. And so they don't mind if they actually lose a bit of money in a year when the market's down a lot, as long as the hedge fund massively outperforms the index. And they don't mind if the market is up 40% and they only make 35% in a hedge fund. They care about capital preservation first. And Warren Buffett used to say the two most important rules about investing are as follows. Number one, don't lose money. And number two, don't forget rule number one. And so hedge funds is all about risk management and mitigating volatility. And I'm about to release a video in the next couple of days on my my YouTube channel on how to raise money. And I use billions, of course, as an example. And I talk about the criteria for how to raise money in all industries. And what people look at also is monthly volatility and something called a Sharpe ratio, which I can talk about if you want me to right here. Yeah. Okay. And then Theodore wrote, thank you for your advice. You're most welcome. Next question is, why is Berkshire Hathaway holding T-bills for a large amount? Doesn't it make sense? Give me a second here. Give me a second, guys. It jumped on me. It happens sometimes. Yeah. Does it make sense to dump that money in some hedge fund or other AI or something that is safe and gives 10%? Yeah. So an AI investment is not safe. And Warren Buffett is a value investor, not a growth investor. But what he's basically signaling to the marketplace is he thinks the market is overvalued right now. And he's going to wait for a massive pullback before investing more. And there's nothing wrong with that. Yeah. Okay. And he's being careful too, because he's transitioning out. And it would look really, really good to potential investors if the market crashed and Buffett left and the new portfolio manager put all that T-bill stuff into stocks and had a good first year return. Everything he's doing is very strategic. Yeah. What is wealth for you and how you define it? Yeah. Well, I don't measure a man's worth by the size of his wallet, to quote the great movie Wall Street. Wealth for me means somebody whose purpose on this planet is to serve others and make the world a better place when they leave it. The wealthiest person on the planet for me was Mother Teresa, right? Second to Jesus, of course. We're here to serve others. That's what wealth means. A wealthy person also is there for his children. A wealthy person does not give up on his wife. A wealthy person does not worship money. Don't forget one of the 10 Commandments. Don't worship money. No false gods. A wealthy person takes care of themselves. The body is a temple. It's made by God. A wealthy person doesn't worry because God already knows what's going to happen. A wealthy person focuses on being happy every day. Now, when I went to Mumbai many years ago, on the ride from the airport to my hotel, we went by the slums, and that changed me. I saw so many people with nothing, and there's a lot of wealthy people in Mumbai too. I saw a lot of people with nothing, so happy, laughing, not a care in the world. Isn't that what we're here for? And I want you all to read The Art of Happiness by the Dalai Lama. And in that book, he said this: the problem with Western society is we sacrifice our health, our entire lives, in order to make money. And at the end of our lives, we sacrifice all of our money to maintain our health. And we look back and we realized, I never really lived to begin with. Don't make money your God. Now, I went to business school at Columbia University with many people whose parents were billionaires. The family is depressed. The kids are depressed. Everybody's depressed. And when I worked on Wall Street, every Christmas bonus season, everybody was depressed because they compared themselves with those that make more. The only reason you should look in your neighbor's bowl is to see if they have as much as you do. So wealth for me means happiness every day. Don't you want to be happy? What a miserable life it is in existence to work your ass off your entire lives so that you can retire and enjoy the last 5 or 10 years of your life. Is that really living? Be grateful every day. And I know today is Thanksgiving, but I want you to wake up every day and thank God for 10 things. And I want you to practice Thanksgiving every day. You'll be happy. You'll be happier. And I believe, and I'm a spiritual man, okay? I believe in God, of course. But I believe that if we worry about ridiculous stuff, we're questioning our faith. Because God always knows what's going to happen. Oh, here we go, Chris. That's right. Think of all the crap you've worried about in your life, none of which came true. I really think if we worry too much, we're questioning our faith. We don't want to do that. And this is where it drops off. I don't care. I'm just getting started. I see tons of people left. Good. But let me ask you guys a question, and I know the answer to this. Do you believe in God? Does God believe in you? Well, if you don't believe in yourself, then you might have to question your faith. And we're never going to do that. Let that sink in, guys. God believes in you. So if you don't believe in yourself, are you questioning our existence? No. Be happy every day. That's what we're here for. Another reason I'll never do accreditation. I don't want no government telling me what I can and can't say because God belongs in school. Okay. Oh. Mallory wrote, desk and vest. I'm in the hospital with my sister watching you. God bless you. And please give your sister a big hug for me. And thank you, Mallory, also for this idea here. Yeah. Yeah. It's heavy. Yeah. Okay, cool. Omar, looking forward to chatting with you. Regarding capitalism, I believe free market is the most fair. Yes. Yes. Communism, bad. Nvidia is almost a $4.5 trillion company. I think it got to 5 at one point. Yeah. Never buy a stock at an all-time high. How big can it get? Can it be too big to fail? Yes, it can. Jensen said they're not the next Enron. Yeah, Exron was a fabrication which caused Arthur Andersen to go belly up, but not McKinsey. I wasn't fair. Yeah. Yes, Nvidia is too big to fail. It's too strategic for national defense reasons. Okay. Somebody wrote here, I started watching Billion series after your reaction video on it. Thank you. Thank you. And the co-creator of Billions reached out to me and said some really nice things to me. And a lot of people actually that worked stagehands, etc., editing folks, etc., on Billions have reached out and said, thank you. Now I understand what we were filming about. It's fun, man. Yeah. Mohit, Aaron, is from Delhi, by the way, IIT guy, and now holds a PhD too. Cool dude. Yeah, he's great. Yeah, I think he went to Rice. Yeah. PhD is plumbing, heating, and dishwashing. Or Pizza Hut delivery, I think. Okay, Floyd Merriweather Jr. invested $5 million in Jeff Sutton's REPE and was getting $50K a month. Is the common with real estate private equity firms? Yeah, I don't know anything about investment, sorry. Yeah. All right, we don't have much time left, guys. I'm going to wrap this call up very soon. And then, again, quick reminder to everybody that's in my premium programs, there are no Zoom office hours today because Thanksgiving. Okay. Hey, Charitra. Okay. Want to know about how to get into hedge funds? Yeah. Yeah. If you want, you can set up a call with me if you want. Just go to my, yeah. It's networking because hedge funds don't advertise for jobs. Yeah. Okay. JFK was so cool. Bless him. I agree. 100%. He died too soon. All right. McFlash wrote, every rich person is leaving the UK to go to the UAE and the biggest outflow of millionaires in the world by far. Yeah. I believe in low taxes. I do. And I believe in tiny government too. Yeah. The UK is just too traditional and conservative for that. Yeah. But I am proud that Canada still has ties to England. Yeah. And I'm convinced that anybody with a British accent is smarter than me because they speak gooder than me, eh? Yeah. All right, let me switch back to this background here. All right. All right, next up, I have got here. Where do you think the next big short would be? The AI bubble, private equity, private credit, emerging market debt. I'm eager to cash in on it. Yeah. I mean, everybody knows that we're in an AI bubble right now. It's just nobody can time it. Yeah. And what's gonna pop this AI bubble is probably gonna be something called a black swan. I have a great book on this. I wanted to show you guys. I can't find it somewhere here in my messy office. But there's a great book called The Black Swan, which means a rare event. You don't see black swans often unless you're in Tasmania, I guess. It's going to be some rare event that causes this bubble to burst. I don't know when it's going to happen. No idea. But AI is definitely the next bubble. Yeah. So technically, it's impossible to replicate the Bay Area. Yeah. It won't happen overnight. Because that took decades, eh? It took decades. It took decades for Silicon Valley to be built, the pushback in the Vietnam War, cultural stuff, etc. Yeah. Why is Venezuela so important for a conflict now? They have tons of oil too, by the way. Yeah, they've got the largest reserves, actually, heavy reserves, heavy oil, in the world. So what I think is happening with Venezuela is this. I don't think the United States is going to attack Venezuela. I think they're putting enough pressure on them by having a lot of ships there, a lot of pressure on them so that the current political leader steps down. He disgusts me as much as Hugo Chavez does. Why is that important? You don't want a communist country close to the United States. You don't want that. You don't want Russia or China to cozy up with communist countries close to U.S. borders. That's it. It's not. It basically a little bit about drug smuggling and the 80 ships or whatever that have been shot down by drone attacks, but it's more so about communist filth going away, which I think will happen. Yeah. And that's why, like the Reagan administration too, they did a lot of stuff in South America to fight communism. You don't want that in your backyard. Do you have a course on how to start a hedge fund and portfolio strategies? I do. It's part of my program. Just set up a call with me here at that link you see. And for anybody on Spotify, it's harounventures.com/meeting. Yeah. Okay, a couple more questions, and I think I'm going to stop for Thanksgiving. Why did you never raise money from Russia, China, or India? Or did you because these nations are too defensive? I've never said that, but I definitely never raised money from Russia or China. But I've been burned investing in Russia and China, not India. I've done incredibly well in India. I love India. The problem with Russia and China is I just don't trust the accounting. It's not a knock on people that are Russian or from mainland China. I just don't. I've been burnt. So, for example, I invested in Lukoil and Gazprom many years ago because the PE was 2 or 3 times. Very low number. But that was fraud. Yeah. Yeah. Okay. What is the best technology company today which is run by its founders? Oh, I'd probably say Nvidia. Yeah, run by its founder. Yeah. Okay. All right. How would you explain Sharpe ratio, not just in terms of risk to reward, but also what is it and the formula for it? Yeah, absolutely. So Sharpe ratio means how well you do investing relative to the amount of risk you take. And the formula is as follows. What was your return? Let's do numerator. Your return minus the risk-free rate divided by volatility. So volatility, think of that as being like standard deviation. So let me give you a real example. So Renaissance Technologies, over a 20-year span, this is true, they had returns of 44%. Okay, so that's a return on the numerator. Minus the risk-free rate of a couple percent, right? Maybe 2%. Divided by, so now we're at 40 on the top, 40%. Divided by the volatility in their fund, which was 20%. So 40 over 20 is 2. That means their Sharpe ratio was 2, which is excellent. Now, the average hedge fund has a Sharpe ratio of 0.7-ish. A good Sharpe ratio is 1. An amazing Sharpe ratio is 2. And a crazy 1-year insane performance is 3, which hardly ever happens. Bad Sharpe ratio is closer to 0 or negative. That's it. And I'll explain that in a lot more detail in my next Billions video that comes out in a couple days or so. Yeah. Okay. Sundar Pichai from Google, said, if the bubble bursts, and not when. Yeah, he's right. It will. Just like death and taxes. No company would be immune from it. Why? I mean, companies like Cat or Walmart or GM, they don't have much in AI or tech anyway. Yeah. So the problem is this. Okay. So if we go back to 1999, okay, in the previous stock market bubble, 17% of the net worth of Americans was in stocks. Today, it's like 21 or 22%. And so if the AI bubble bursts, the Magnificent Seven or top 7 AI stocks drop materially, it will create a negative wealth effect. So if the AI bubble bursts and the market were to drop, hypothetically speaking, 30%, everybody would feel a lot poorer in America. Therefore, they would spend less money. And as I mentioned before, 2/3 of the United States economy is consumer spending based. And that is why it would hurt every company, especially Walmart from a spending perspective because they're a retail company. But it would also filter through to other companies like Caterpillar, ticker CAT. Because they make stuff, or they have machines that make stuff, and the stuff that's made are bought by consumers. Okay. All right. In God we trust. Everybody said, I'm a firm believer in God. Amen. You're warming my heart, folks. Yeah. Thank you for everything. Happy Thanksgiving to you and your family. Thank you, Manas. God bless you. See you all next week and forever and ever. Let's push the goalpost from the roof. That's right. And then you wrote, I'm reading Taleb's Fooled by Randomness now. It's another good book by him. So Nicholas, so Taleb, he's this Lebanese dude, and I'm 25% Lebanese. And he's written a lot of great books. Yeah. Smart guy. All right. And then Sean wrote, Happy Thanksgiving. Surprised to see you here in the holiday. That's dedication. Thanks. Yeah, I asked my wife, I said, when are we driving down for Forced Family Fun to see her cousins in San Jose? And she said, a little bit later on today. So I thought, what the hell? This is fun. Hey, the way that you know you found your passion is if when it's supposed to be a holiday, you still do it. You still show up. And that's my purpose too. All right, so I know I love to use props. This is where I proposed to my wife. She said yes. I ripped this a couple weeks ago, I think by accident. But I feel like I am your waiter, all of you. Now, when you go to a restaurant, let me change camera angles here. When you go to a restaurant, you look at the whole menu, okay? You only choose 2 things. You look at the whole menu, and you choose 2 things to eat. So that's my job for you guys. I'm here to provide you with a menu of careers. And once you find out what you're most passionate about, that is the job I'm going to help you get, or the company I'm going to help you start. I'm here to serve others. Okay. What is your opinion on buying a luxury item like a watch as an achievement piece? Is it stupid or acceptable if one can afford it? No, I think it's a good investment for a couple reasons. Number 1, it makes you look more professional. Number 2, these things go up in value. That's right. They're good investments. Okay. This is a Rolex. I bought this with my signing bonus when I got a job offer from Citadel. I was in New York City Midtown. I bought it July of 2004. And I started Citadel, I think it was in August of that year as well. It's been a good investment. And it's the cheapest Rolex you can buy. Yeah. Nothing wrong with that. Yeah. Okay. All right, guys, I am going to wrap up. Oh, thank you so much, Jimmy, for the donation. God bless you. Appreciate it. Thank you. I love you. I'm going to wrap this up, guys. I want to wish you all a happy American Thanksgiving. In Canada, where I was born, Thanksgiving is 6 weeks earlier because the harvest is earlier there because it's cold, eh? God bless you guys. And I'm going to end this webcast, like I always do, with a 1-minute clip that will change your life. I licensed this. It's a Steve Jobs interview from the Silicon Valley Historical Association. Everybody, appreciate today and every day what you have, and don't focus on what you want. Retail therapy doesn't work. unless GTA 6 comes out and it's on the PS6. Then retail therapy does work. God bless you. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.